Over the Road article, July 2024. Don't negotiate your taxes with an accountant. They don't have the authority. I've interviewed several hundred operators in the last couple of months. Too many of them simply did not understand the basics of personal income taxes. I had several who stated if the taxes are too high, they argue with the accountant till they reduce it. Others say if it's too high, they just move to another accountant who gives them a lower amount. That's not how Canadian income taxes work. It's not like haggling with a vendor on the beach of Jamaica. Well, not at the initial filing level anyway. Sometimes when someone goes through an audit, there are a bunch of discrepancies. For the sake of simplicity, a compromise can be made with an auditor. However, it's never that way year over year. When someone haggles with their accountant to reduce their taxes, they are not understanding what they are doing. First, what saves taxes as an operator is not the accountant. It's the system the accountant uses. For instance, the TL2 simplified method produces a certain result, while the non-taxable benefit system will produce a very different, lower taxable amount. What is necessary is to interview the accountant to find out what system they use before you hire them. Too many tax preparers who serve operators have no idea about the non-taxable benefit system. The TL2 and the non-taxable benefit system both use some of the same terminology, such as per diem, which is simply Latin for per day. If you have two accountants and they both use the TL2 system, they should get the same dollar figure if both calculators work properly. If there is a difference, it has to do with missing documents or documents in dispute. Historically, meaning in the 1970s or prior, there were many more discrepancies between accountants. It was before most desktop computers and software standardized methods. I remember my parents' accountant coming to their business and clickety-clicked an adding machine to spit out a narrow roll of paper with numbers on it. Accountants used to defend most all tax returns as a professional policy. So, when they were liable, they tended to have some of their own standards of expenses. If they didn't want an audit, they were very conservative. One accountant I know always held back a few $1,000s of invoices when an audit came, so that when an audit came, they produced more deductions and the auditor had to start from a negative position. In effect, that accountant had the client pay for his own tax insurance policy by not expending legitimate invoices. It is a very old and cruel system accountants used to use. However, the idea that accountants guard the tax gate is still out there. But the reality is, especially towards an independent operator, there is basically nothing to negotiate. What happens when a client haggles with an accountant to lower the amount owing is almost assuredly some form of fraud. I wish it wasn't, but I'm afraid it probably is, especially based on the amount that is reduced. Maybe a few $100s is negotiable through home expenses, auto expenses or so, but a few $1,000s? That requires the re-engineering of major expenses. Since the majority of operators use private home-based tax preparers, the operator will be carrying all the liability in case of reassessment. In effect, if the client pressures the tax preparer to falsify the return on their behalf, they do it to themselves. From an ethical perspective, it makes no difference. Not knowing how someone lies for them doesn't absolve them of the lie. They are still complicit. If someone wants to be an independent operator, they must understand at least the basics of taxes. Taxes for an independent operator is one of the simplest businesses to prepare. Revenue, less expenses, equals taxable income. Understand what expenses can be used. Make sure you understand how non-taxable benefits work and then use them. save taxes. Blindly delegating is a very poor business model. I remember writing this last year, and I had a fair bit of experience because I was talking to quite a few operators just a few months prior to this article being written, talking to them at the truck show in Toronto and Truck World in 2024. Lots of operators basically had reflected to me that, hey, by the way, I'll just talk to the guy until he reduces it. Then when I talked to them about different systems and the like, most of them had no idea that what they were doing with their own accounting or with their own what they were implying their accountant could or could not do. Especially when it comes to software nowadays. And by nowadays, anything from 1980, 1990 forward, it was taken over more and more by software, especially in the 2000s when tax software came in. It's more than just accounting. Now it's actually tax software where you look at a whole bunch of deductions and stuff like that. And it's all clearly put into the software. Realistically, it is getting more and more difficult to lie on your income tax return. You actually have to go right on back to your income statement and balance sheet and be able to throw it straight into some sort of lie into there. I remember very clearly number of years ago there was an accountant in Edmonton, Alberta, who had a whole bunch of operators who paid very little in taxes. No matter where they worked, they seemed to nobody paid more than $1,000, $1,500, maybe $2,000 or something like that. And statistically, that's actually impossible. You can't do it, especially for instance if they were using the TL2, which at the time they were. And so when an auditor came into the office and he started looking, went through the balance sheet and income statement, and then saw the difference between the income statement on the software that said a certain dollar figure for fuel, and then looked on the statement on the tax preparing whatever program they were using, and there was precisely $30,000 difference between the working copy and the actual income tax copy. And so the auditor very clearly said, well, what happened? Where's that extra $30,000? The accountant, I guess, shrugged his shoulder, and bottom line is within 2 weeks, the guy disappeared, and he had dozens of clients, and nobody knew what the status on their paperwork was. Well, it's very easy. The auditor just started going through every single one of the auditor or the tax preparer's returns, and he was lying on almost all of them. It was really I guess you would call it a little bit of a stupid one. It was inevitable. The guy was going to get caught. There was no way to get around it. There's ways in which there's another one just locally around our head office, I'd say about an hour and a half away, and they thought that they got around some of the technical aspects of it, and so what the tax preparer did was they didn't e-file the return. What they did was they printed out the return in paper form, had the client sign it, pay for it cash or whatever, but the accounting firm name itself was nowhere on the documents. They couldn't trace anything and like that, and so they started handing in, and there was apparently hundreds of them taken directly to the mail or Canada Revenue Agency and dropped off, and that individual, their clients paid, his clients paid very little in taxes. He used everything as a deduction. Everything from your mother-in-law to things that may not even exist. If you said it cost you to do something, he said, I think that's a business, and he just pull things out of thin air and put them on there. Now, the problem is, well, not the problem. Reality has a way of catching up with people who lie. Because what Canada Revenue Agency, they're not stupid. I mean, it's reasonable. If all of a sudden you have a certain amount of paper returns in a certain jurisdiction, and suddenly now you have a 30 or a 40% jump in paper, and you take a look at it, it becomes automatically suspect. You do not need to be a statistician to understand that, hey, wait a minute, if this guy's doing it more than once or more than 10 or 20 of them, it automatically flags and they start looking for anything that is physically handed in. If it's physically handed in, first of all, it takes much longer to process, and second of all, it's you absolutely, everything is recorded, and you can't hide it. Like it's all there. So it falls within its own category if you start doing something unique like that. So taxes, they used to call years ago, there was tax loopholes that people can find, and your accountant knows those loopholes. Well, goodness sakes, the software that's available right now, it reveals all the quote-unquote loopholes that there really are. And realistically, there is virtually no loopholes. I would call there's a few things that maybe I would define as loopholes. Like, for instance, an RRSP. If you buy $10,000 worth of RRSP, wham, that is a loophole where you don't have to pay taxes on $10,000 that you made in that particular calendar year. That is a loophole. Now, but it's a totally legitimate loophole. The difficulty, of course, is you have to actually put $10,000 into a RRSP, and it's all registered, and you can't put $10,000 in there. 10 minutes later, you pull it out again, and it's all regulated, but it's a legitimate loophole. The closest to a loophole that is out there, and the article actually said the difference between the TL2 simplified method and the non-taxable benefits. That's what I wrote my first book on. Was the non-taxable benefit, and it is a form of a loophole. It's no different in it's actually a little bit better than an RSP, because if you follow the rules and there are very specific rules to non-taxable benefits, if you follow the rules, it actually benefits you more than an RSP does, because you can pull out, let's say, technically, we have a lot of clients, most clients, $35,000 out of your corporation, and it's classified as an expense to the corporation, and it's pulled out and it's put into your personal account at a specific amount, at specific time periods throughout the year. And even though it's 100% goes into your personal account, it is classified as tax-free or non-taxable benefits. That's what it is. It's an expense to the corporation, and realistically, everybody would love the idea of pulling money out and not paying any taxes on it. And unfortunately, there's a lot of people who say, "Hey, I'm going to have a corporation, and I'll pull all the money out of the corporation the same way that I spent all of the money when I'm self-employed." You can't do that. You can't do that self-employed, and you can't do that when you're a corporation either. In the end, if you pull out $50,000 out of your self-employed account when you are self-employed, you have to pay taxes on that self-employed. You don't actually physically pull it out. Sometimes all it is your revenue is $200,000, your expenses is $150,000, and there's nothing left in your account. So you pulled out, you have to pay taxes on $50,000. So it's no different than if your corporation has $200,000 worth of revenue, $150,000 worth of expenses, and then you just drain the money out of there. One you actually have to take it out of a separate entity, your corporation, and the other it's your personal account and you just blow it. But it's treated identically by Canada Revenue Agency. It's just the difference between your revenue and expenses. But if you have something more in your corporation, something in your corporation that's called a non-taxable benefits, you can pull it out and put it into your personal account and not pay any taxes on it. And it's 100%, it's a tax write-off for your corporation. And that's the difficult, it's an easy concept if you do it on a regular monthly basis. You see the logic and you say, oh, okay, this amount, this my salary here, I pay source deductions on that, so I got to pay taxes on my salary, but the non-taxable benefit, that's tax-free. If you do it every month like that, you actually understand how the tax system works better than if you were, say, self-employed and you just say, well, I made $200,000, but I don't have any money left in my account, therefore I didn't make any money. Well, that doesn't make any logical sense. If you spend it all personally, then of course you made the money, you just spent it. The difference between self-employed and incorporation is the incorporation actually tracks how much you take out of your corporation and spend personally. And the self-employed actually just assumes that you take it out because you already have it in your personal possession, and they don't count it as an expense. So it's treated from a tax perspective identically, except one you actually see that it's taken out of your corporation, the other not. So the whole concept of non-taxable benefits is the biggest and most dramatic tax. I don't like to use the word loophole because a loophole makes it sound like you're doing something illegal or something like. It's not illegal. It's no different than an RSP. It's just a different way of producing your taxes to Canada Revenue Agency. And every independent operator in Canada should be using non-taxable benefits. And the only reason they shouldn't be using it, if you really want to pay a lot more taxes, if that's your goal. And I'll tell you a funny story. We had a client come, and they were paying approximately about $18,000 per year in taxes, and they had been for many years, decades. And then they came to us and they started using non-taxable benefits, learning the system, and a couple of years into it, about 3 or 4 years into it, I heard that they were leaving and they were not going to be using us as accountants anymore. So it's a very rare thing that somebody leaves us, but when they do, I like to find out why. So I called the husband and I said, why? He said, oh, we really appreciate your work. Thank you very much. But my wife wants us to leave. And I said, can I ask why? Like, what is it? Is there service or something? No, everything's fine. He said, but she doesn't believe that we're paying enough in taxes. And I had to clean my ear a little bit, and I said, what do you mean? Not paying enough in taxes, and the husband said, my wife has a very sensitive, a very sensitive heart, and we were used to a certain level of taxes, and now suddenly she thinks we're paying so little in taxes that she's feeling guilty. And I said, even though what you're doing is completely legal and we defend it to Canada Revenue Agency. And he goes, yes, I understand, but it's my wife's conscience. Well, I respect a person's sensitivity and conscience and work with their conscience to do what they believe to be right. That is a very awesome thing. But where it comes into conflict with me, it has to do with taxes. Primarily, I think, because I really don't believe that taxes are an ethical thing. It is a necessary thing for a country to have taxes, but it is personal income tax is grossly overutilized in the free world. The society in general has reached the peak of its taxation generally somewhere around the 1970s, and the rates were very high, and people were, I guess you would say, starting to rebel. And you can see the pendulum swinging between political parties. One party would be high taxation and the other, and then when people got so discouraged, they'd get them out of they get them out of power, and they put the lower taxation party into power. And the pendulum swing went back and forth and back and forth, and through the 80s, the income tax generally actually came down during the 1980s. A little bit came down in the 90s as well, and then it turned around and it started going back up again. And there are different ways in which politicians judge whether taxes are becoming too much of a burden and they're gonna be booted out of office. And they've reached the peak in so many different ways that it's sort of like they're finding out, okay, we'll tax over here then because they don't like that. And during the early in the 2000s, should I say, in the early 2000s, there was a whole bunch of new taxes that came in. You got tire taxes, you have environmental levies, you have all of these new ones came in because they couldn't effectively get the other ones high enough. In Canada was a big one. GST used to be 7%. And then when people got really ticked of it, the Liberals were kicked out, and then the Conservatives came in, brought it down to 5%. Then the Liberals came in again. And if they would have bumped it back up to 7% again, they knew they were going to lose. So instead of doing that, they started coming out with these new other kind of taxes. And I guess the latest one to come out is the big one. That's the carbon tax, which is a tax on a tax. And it is horrible, okay? And people are so sick and tired of taxes. And they can't, there is a distrust for the government. There is an animosity in society towards taxation. It's really, really bad. So much so that even after COVID, or during and after COVID, you had political parties canceling some taxes, and this was a little bit seriously sobering for myself. Even when I look, the biggest thing is like the fuel taxes. For instance, you look at Ontario, Alberta, Saskatchewan, different taxes, different provinces suspended fuel taxes for automobiles, giving the perception of the provincial citizens a reprieve on taxation. If you're a student of taxation, fuel taxes is actually a consumption tax. It's not actually an income tax or even a but it's a consumption tax. It's actually, if you drive on the road, then there's a tax to that. It's associated. It's not a consumption tax. I can't remember what the name of it is. It's a user fee, I guess you would call it. It would be another one. And they just province after province, one after the other, just said, okay, we're going to suspend it for 6 months because people can't afford to, their ends they don't meet anymore. They're all in debt and they're all just panicking. So we're going to suspend these taxes. Wow, that's amazing, isn't it? Wouldn't you call it when a province just said, you know what, we're going to suspend these, we're going to suspend the fuel tax. Well, first of all, it's very easy to suspend the fuel tax from a legislation perspective. They just say, okay, six month hiatus, and they don't collect it anymore, so you don't have to remit it anymore. So wherever you fuel up at the pump, they just take the PST right off of there. I didn't even know that they had the power to do that, or I guess they had the power, but they've never ever utilized that before. That's because people are sick and tired of taxes. And how in the world can they just say, okay, well, the people are so sick and tired, we're just going to stop taxes? Wait a minute. Let's throw it all out. Why don't we at the same time? And that's my reaction. But realistically, all politicians know that society has pretty much had it with taxes, and it's ingrained in my heart. I knew we were at the pinnacle, back in the 80s already, and they were fooling with taxes. But now it's totally open. Like back then, they reduced the corporate tax, personal income tax rates, and stuff like that back in the 80s and 90s. But now they're just doing it openly, right at the pump, and so our society is changing quite a bit when it comes to taxes and how we are even the politicians are viewing their relationship with taxes. So it's very we're in a very incredible time right now where things are changing, not just politically, but in relation to taxes. If you are an independent operator, the most dramatic thing you can ever do for your taxes is use non-taxable benefits. And as I was saying, when I went to the truck world in 2024, I interviewed, I think, 350 accounting firms. Not one accounting firm, oh wait a minute, there was one in BC, used non-taxable benefits. There was one firm that used it in BC, but they were not using the same dollar figure that we use. We tie everything to the Treasury Board of Canada, National Joint Council, and have a rather sophisticated employer-employee agreement, and we train people how to utilize it. It's just a few cents less than $145 per day. And that $145 has to be compared with the approximate $17.04 using the TL2 simplified method. Very big difference between the two systems. And many, many times, so you're comparing $17.04, which over 99% of all accounting firms out there, they use the TL2 simplified method, $17.04 per day. Using non-taxable benefits, we use $145 per day. That is almost 10 times the amount of savings. It's just that dramatic. If you're an independent operator, before you look at anything else, ask that one question. Okay, I got to use non-taxable benefits. And I remember in 2007 when my book came out, I thought everybody was going to be using non-taxable benefits. And I just buckled up and I thought every accounting firm will be using it. And yet now we are 22 years later, not since my book was published, maybe 18 years since my book was published, but they're still not using it. And the primary reason is, there's actually a number of reasons. I can give a few reasons to you. Number one, you as an independent operator, accounting firms view you as low-paying freight. The amount of money that you're willing to give them for accounting fees does not cover the costs of covering the liability issues of non-taxable benefits, and also the technology that is needed in order to track and defend it to Canada Revenue Agency. Accounting firms are not interested in making that huge investment into technology in order to defend it to Canada Revenue Agency. We have well over 500 operators using non-taxable benefits. And if we had less than 350, it would not be worth it for us to use non-taxable benefits. The liability issues is just too much. You have to use technology, and you have to be very singular in focus towards Canada Revenue Agency and presenting non-taxable benefits. You have to know what you're doing. there's not enough money serving the independent operator industry if you're not using technology. I realized this probably about 7 or 8 years ago. We were working like crazy. I was working like 16-hour days, nonstop. And then I said, look, there's just no way for me to make a living unless I utilize technology. So we started heavily investing in technology, making it easier and easier and simpler. And now we can actually make a living doing it. I want to be able to keep the cost to you, the operator, down. And the only way to do that is to scale what we're doing by using technology. So not only am I saving taxes, I want to keep on keeping the accounting fees down as well. And the only way to do that, of course, is not just to use technology, but also to use technology to scale it so that more people are able to use it, so that if more people are using our software, that means that we can afford, number one, to pay our employees more, and also be able to defend everything well and good. It is. I love the industry. If all I wanted to do in life was just make money, I would probably not be in the independent operator accounting industry, because the margins are just far too small. But I do it because I love the independent operator industry. It is in my blood. I used to do it myself. My wife and I used to drive. I have dedicated my career to this industry, not just by writing 2 books, but also writing hundreds of articles, and now podcasts, and having a firm that is committed to serving the entire independent operator industry in Canada, saving. My goal is to save $1 billion in income tax in my career. So far, we've been collecting all the data since 2006, and we've saved about $78 million. But that's not even 8% to the goal. So unless I live to 250 years old at the present rate of saving taxes, we need to scale what we're doing. So that's just telling you a little bit about where we're going. But when it really comes down to it, that's the number one thing, is non-taxable benefits. And yes, there are some disadvantages. There's some podcasts we've done on the disadvantages of them, of non-taxable benefits. But every single one of the disadvantages can be overcome, and actually not very difficult. It is if you follow the plan, it's actually a very wise reaction to a lot of situations of the disadvantages, and to overcome the disadvantages of non-taxable benefits. It's actually wise for your entire life. Anyway, that being said, that's a lot about a particular article. But like I said, it's the one reason why I'm in this industry, and so it's the reason why I'm not leaving the industry, because I love the tax savings. And I hope your conscience will allow you to save taxes, and so then look into non-taxable benefits. Give us a call. Call me if you need any information on it, and how you can apply it to your life. Other than that, have a great trip.
Thanks for stopping by Making Your Miles Count. For further Making Your Miles Count productions, call us at 877-987-9787 or download us at makingyourmilescount.com.